You're driving home on I-95. Everything is normal, and then it happens. The screech of tires, the jolt of impact, fender bender, or maybe it's not a crash. You walk out to your parking spot in Miami and see a cracked windshield. Your car is it's gone. In that single heartbeat, one terrifying question cuts through everything else. Is my insurance going to cover this? For most of us, the answer is a gut-wrenching. I don't actually know. We pay the bill every month, but car insurance remains this expensive, confusing mystery. But that ends today. What if you could understand it so well that in that scary moment you knew exactly what to do and felt completely in control? Let's demystify it together. Let's start with the single most important concept. Car insurance is not a punishment or a pointless tax. It is a financial safety net. Maria, a 24-year-old graphic designer in Austin, saw her $120 monthly premium as just another bill draining her account. That changed on a rainy Thursday morning during her commute. Distracted by a notification, she looked up just in time to rear-end a Toyota Camry at a stoplight.
Ow.
Her heart sank. The damage to both cars was obvious. Her mind immediately raced. There goes my rent, my savings, everything. But then, she remembered her safety net. She called her insurance agent, filed a claim, and within days, she felt a wave of pure relief. The insurance company handled the $3,800 bill to repair the other driver's car and her own bumper. That $120 monthly premium, it just saved her from financial disaster. That is what you're buying, peace of mind. So what's actually in this safety net? It's built from 6 key coverage types. Think of them as your personal protection squad. First, the non-negotiable core required in almost every state, liability.
You're there, and this is for when you're at fault.
Bodily injury liability pays for medical bills if you hurt someone else. Property damage liability (PD) pays to fix the other person's car or whatever property you damage. But what about when you're not at fault? That's where the Johnsons in Denver come in. They had what they called an unlucky summer. First, a hit-and-run driver sideswiped their parked sport utility vehicle. The other driver was long gone and almost certainly uninsured. This is where uninsured motorist and/or underinsured motorist coverage steps in. It protects you and your car from drivers who carry little or no insurance. Then, a freak hailstorm left their sport utility vehicle looking like a golf ball. This wasn't a collision, it was an act of nature. This is exactly what comprehensive coverage is for. It covers damage from things other than a crash, theft, fire, vandalism, falling objects, and yes, even hail. And for damage to your own car from a crash, you have collision coverage.
So,
to remember the ones that protect your vehicle. Comprehensive is for everything else, and collision is for, well, collisions. This brings us to the critical lever of control in your policy, the relationship between your premium and your deductible. Your premium is your monthly bill. Your deductible is the amount you pay out of pocket before your insurance kicks in on a claim. Diego, a 29-year-old restaurant manager in San Francisco, faced this choice head-on. Uses his Ford F-1504 weekend gigs. To save $50 a month on his premium, he opted for a $1,000 deductible instead of $500. That decision became crystal clear when a rock cracked his windshield. The repair cost was $600, but because his deductible was set at $1,000, his insurance wouldn't pay a single dollar. Diego covered the entire bill himself. He saved on his monthly payments, but he accepted more financial risk for smaller incidents. It's a direct trade-off. Its most powerful financial move with car insurance isn't just skimping on coverage. It's being strategic. Loyalty to one company often costs you money. Aisha, a 24-year-old grad student in Atlanta, has a simple annual ritual. She sets a 30-minute timer and shops around. This year, she got a competitive online quote, then called her current provider. She mentioned the competitor's price and asked about bundling her auto insurance with her renter's insurance. The result? By spending just 30 minutes a year, she secured better coverage and saved over $400. That's real money back in her pocket, just for being proactive. The secret isn't a secret at all. Shop around and bundle your policies. So let's bring it all together. Car insurance isn't a stack of confusing paperwork. It's your financial airbag. It's the relief Maria felt after her first accident. It's the protection that saved the Johnsons from bad luck and bad drivers. It's the calculated trade-off Diego now understands, and the strategic tool Aisha uses to save hundreds. Understanding these core concepts transforms you from a passive bill payer into an empowered, protected driver. Your turn. Grab your insurance policy right now. I challenge you to find your liability limits, your comprehensive and collision deductibles, and check if you have uninsured motorist coverage. Knowing what you have is the first step to total control. What's the most confusing part of your insurance policy? Drop it in the comments below. I read every one and might make a video answering your question directly. If this guide gave you clarity and confidence, hit that subscribe button and turn on notifications. We're here to make adulting and personal finance simple. Thanks for watching. Drive safe.